Today is June 18th, Thursday, and this is a post-market wrap-up review. You're looking at a chart of the SPY futures contract, and we started the day today with two headlines that captured our attention. The first headline was on the coronavirus reemergence in Beijing, China. Of course, the headline says that the virus is under control, and that helped the futures a little bit. Of course, we don't trust the information from China. I actually pulled up some of the traffic data from TomTom, and you can see that the traffic in Beijing is actually way lower than it was a week ago. So there's something going on there. The other headline is, of course, the unemployment report. We found out that an additional 1.5 million Americans filed for unemployment benefits this week. The recovery story that's being sold to us is not really as good, as optimistic as they're trying to make it sound. And when I say they, it's people on the business news channels and officials from administration, of course, Kudlow and others telling us that, hey, it's a very steep V-shaped recovery. Certainly doesn't look like it when you have 1.5 million applying for unemployment benefit this week. So the futures turned negative again based on the numbers that we got. I put up this tweet that this could be the day where the buy the dip buyers finally give up, because they bought at the end yesterday, at the end of the closing of the market yesterday, and the market dips lower. So I was under the assumption that this is going to be the day where the dip buyers give up. Guess what? I was wrong. The dip buyers came out in force in the beginning of the market and bought the dip. And we'll take a look at that in the charts. This is an hourly chart of the SPY, or the futures contract of the SPY. We began the day right here, 6:30, and this was the dip. It was immediately bought, and then we consolidated at the same range. It's the same range that we've been consolidating at for a few days now. Here's what the charts look like from a 15-minute perspective. This is the SPY, not the futures contract. We start the day. Here's a dip, bought, sold a little bit, profit taking, and consolidation. This doesn't mean that there wasn't trading opportunities today. We actually made 3 trades, 2 new trades, and 1 trade that we closed from last week on Wynn Resorts. I'll show you the trades right here. This is a 15-minute chart on Delta Airlines. Now, if you've been following me, you know that I maintain a bearish outlook for airlines, cruises, the travel industry, because we're not out of the woods yet in these names. But they're the day trading crowd's favorite. So you need to understand how their mentality is and take advantage of that. They bought the dip right away to make profits, but they're looking for shorter term profits, so they push it up and sell it right away. So what we did here is we waited until 7 o'clock, right about here, and opened put contracts on Delta Airline and sold them at 8.23 for 45% profit. It was a short trade, taking advantage of the rip here, selling the rip. But again, you don't want to hold a position like this, especially expiring tomorrow, for a longer term. You make your profit and you get out, because the name is very volatile. There are a lot of people who are still pushing and buying the dip in the travel names, so you have to be careful. The other trade was on Norwegian Cruises. Norwegian Cruises had a big drop on the announcement that they will postpone their cruises until the end of September at least. And it's been consolidating here. It dropped lower in the morning, but by the dip crowd came in, bought the dip again on Norwegian Cruises. So I had to take advantage here of selling that rip in the morning, and I entered a trade around 7 o'clock again, put contract, and sold them at 8.23 along with my other options that I held for the day, and that was about 56% profit. Norwegian Cruises remain a favorite among the buy the dip crowd, the day traders, because they're looking at a positive story of recovery. They think that there's value there, so they keep buying every dip. You have to be careful here again, because these guys will push the stock, will try to push the stock higher at least, even though the company itself told you that the outlook is negative. But people will still hope that the company, that this is a value trade, that you're getting a good discount on a company that will recover fast. And I disagree with that, of course. The last trade of the day was on Wynn Resorts. We've been holding these puts for over a week now, so this is not a new position that I entered today. But as the dip was bought in Wynn Resorts, the position was dipping into negative, into a loss. So the minute Wynn Resorts started to turn around and get sold off and some profit taking here, it went back into positive territory. The trade went to positive territory anyways, and I had to sell them and take a profit of 19%. It's a small profit for an option trade, but it expires tomorrow, so you don't want to jerk around. You want to take your profit, and you're not going to lose anything by taking profit. So we're back at the SPY futures contract, and here's what's going on. We had this big move to the downside, a counter move, a reaction, and now the build up, the energy, building up and inviting buyers. Are there any buyers so we can go all the way up, challenge that candle right here, the breakdown candle? Or there are no buyers here and sellers will take over. Profit takers will say, okay, we're not going anywhere, so we'll sell. And we'll see a continuation of a primary move here. That's the primary move, counter reaction, and a continuation of the primary move. Unless we go above this candle right here and close above it, this is the moment where we're going to change our perspective from bearish to bullish. Because when we close over here, over this candle, and the high for that candle was 31.8850, unless we close over that, it means that we're going to all-time highs. But if we don't and we turn negative, then there is more downturn in the market. We try to collect information from every chart we can. Here's a chart of the dollar index. You can see today it closed positive. There is demand on the dollar. And that's usually not good for the stock market, especially in these big swing moves. This was, right here, a market top, and this was a market bottom. It was a top for the dollar index, but it was a bottom for the market. And we're seeing the same thing here, where a bottom in the dollar index correlates with a top in the stock market. Same story with the TLT. TLT closed a big day today, over 1% positive. Now remember that the TLT is a little bit of a canary in a coal mine type of indicator, because it moves a little before the stock market. So we have to keep an open mind here. If there's demand on bond, the cash to buy bonds has to come out of somewhere. And the ATM right now is the stock market. It went to all-time highs, at the Qs at least. It's overbought in many areas in the stock market. So cash will come out of the stock market to buy bonds. Here's a daily chart on the VIX. Big pop, reversal, consolidation. And all we're doing is gathering energy for a bigger move. Is it to the downside, which is going to break, and this was just a mini pop? Or are we going to go all the way to the upside? I maintain the position that this is a primary move. Here's a consolidation. And we're going to do another move to the upside. We'll see. Tomorrow is a very decisive day, and it's option expiration. There is usually a lot of funky business during options expiration week, because there are big banks and there are big players who sold you those options, call and puts. They don't want to lose money. The best way for them not to lose the money is to put a pin on the stock market, to keep it flat, meaning that your calls expire worthless, your puts expire worthless too. However, we've seen more call buying in the last few weeks. Those big players sold more calls than puts. And if the market marches higher and closes higher tomorrow, they will lose. They will have to buy those stocks. They will lose money on the trade. So expect some jerky business here, either to keep the market flat or to push it to the downside. And this is why we've been consolidating in a small range all week. Back to the SPY chart again. A very decisive end of the week, a very decisive week to what's going to happen next to the stock market. Do we continue the march to the downside? Or is this just a dip? I mean, look at how many dips been through this rally. This is the initial dip. Second dip. Third. Fourth. Fifth. Right? And this is the sixth one. Is it the continuation that just dips will continue to be bought and the market will march to the upside? Or is this breakdown right here similar to what we've seen in the market crash in February? Tomorrow is a very decisive indicating day to which direction we're going. Closing tomorrow above this gap, which correlates to the candle, the long down candle in the futures contract, means that our outlook would turn from bearish to bullish, because that means we're going to march all the way to all-time highs. However, if we go to the downside and we close below this gap right here, that means there's more pain to come in the stock market and we will maintain the bearish outlook. If you found this video helpful, please subscribe, share, and like, and do not forget to follow me on Twitter.